The 50-year fuse on the Western financial system is now burning in plain sight. Right now, on the COMEX silver market, over 52 million ounces are standing for physical delivery. The problem? The entire registered deliverable stockpile has crashed below 88 million ounces. That means over 60% of the supposed physical backing is being called for at once. This is the endgame Robert Kiyosaki identified. It's not the real asset that's in trouble. It's the paper promise. And that is the thesis of this video. A failure to deliver physical silver is the mechanical trigger that will expose the fraudulent nature of the entire paper financial system, initiating a systemic reset. We will show you precisely how we got here, the 50-year deception that built this bomb, the tipping point we're at now, the great power shift from west to east accelerating the collapse, and what the inevitable reset means for you. But to understand how we reach this precipice where paper promises are about to shatter against physical reality, we have to go back to the original sin, the moment the system was first rigged 50 years ago. That rigging began in 1975. It was not an accident. It was a deliberate act of financial engineering with one core objective: to maintain the illusion of a strong US dollar, which in turn allows for theoretically infinite government debt. The primary threat to this illusion has always been gold and silver, so a narrative had to be created. Gold is bad, the dollar is good. To enforce this, they couldn't just outlaw physical metal. They had to engineer a system to divert investment pressure. Imagine the global demand for real assets as a massive reservoir pressing against a dam. That dam being the US dollar system. Instead of fortifying the dam, they built 3 sophisticated pressure relief valves to divert the flow. The first valve, opened in 1975, was the COMEX futures market itself. It was designed to absorb real demand for physical metal with a potentially infinite supply of paper contracts. An investor wanting to secure 100 ounces of silver could be satisfied with a piece of paper, a promise, thus neutralizing their impact on the physical supply. The second valve was the invention of ETFs like GLD and SLV. This is a fundamental misconception for most investors. Owning an ETF is not owning metal. The prospectuses for these instruments explicitly state they are not always required to hold 100% physical metal and can use derivatives. It's another layer of paper, a second spillway designed to channel capital away from physical reality. The third, more modern valve is cryptocurrency. While sold as an escape from the fiat system, it serves the same mechanical purpose. It diverts immense amounts of capital that might otherwise have sought refuge in the final safety of physical precious metals. In the words of one analyst, for the purposes of the banking system, they are digital air. Now, you might think this sounds like a grand theory. It is not. It is a documented crime. In 2020, JPMorgan Chase was forced to pay over $920 million in fines to the Department of Justice and the CFTC. And the reason? For committing tens of thousands of manipulative spoofing orders in the precious metals futures market over nearly a decade. This is the official admission. The game is rigged, and we have the receipt. This 50-year infrastructure explains how the price has been controlled. But the critical question is, what happens when the mechanism begins to break? The historical theory is over. When we continue, I will show you the hard, undeniable numbers from the COMEX itself that prove the bank run. The failure to deliver physical metal is not a future possibility. It is happening at this very moment. The 50-year system of deception has reached its mathematical endpoint. The crisis is not a distant forecast. It is an active, ongoing event, and the official data confirms it. The core of the mechanism's failure is a catastrophic mismatch between paper promises and physical reality. The quantity of silver being claimed on paper through the COMEX now vastly exceeds the real deliverable metal in the vaults.
Oh, let's look at the hard numbers. According to the CME Group's own report from March 6, 2026, the amount of registered silver, the silver immediately available for delivery, has plummeted to just 81.7 million ounces.
That is a 31% decline since just October of last year. The foundation itself is cracking. Now, here is where the pressure becomes acute. Against that dwindling stockpile of 82 million ounces, the delivery notices for a single month, March 2026, demanded 52.63 million ounces. That means over 64% of the entire registered stockpile was demanded in one contract month. Physical reality is being physically removed from the paper empire's control, leaving a fortress of empty promises behind. The numbers speak for themselves. Do you believe the COMEX makes it through the month without a major disruption? Vote yes or no in the comments and tell us why. This points to a fundamental change in market behavior. For decades, the game was to settle these paper contracts with cash. Players rarely took delivery. But that has changed. The trend is clear. Inventory keeps bleeding out day after day. People are refusing the paper and demanding the physical metal. This behavior is no longer trading. It is a bank run on the COMEX vaults happening in plain sight. And the true scale of the problem is even worse. The total paper claims in the system are orders of magnitude larger than the physical supply. Some analyses show the open interest represents claims on silver at a ratio exceeding 360 to 1. Imagine 360 people are in a room, and each person has been promised their own physical chair. The problem is, there is only one actual chair in the middle of the floor. That is the mathematical reality of the COMEX right now. The game of musical chairs is about to end, so the mechanics of the Western paper market are confirmed to be in a state of terminal failure. The vaults are being drained. But this begs a far larger question. If the physical silver is leaving the West, where is it going? It's going east. And as the physical metal flows out of Western vaults, it is triggering the single most significant power shift in the precious metals market in 50 years. The Great Uncoupling. The proof is no longer subtle. It's a structural fracture in the global market, visible in plain sight. In early 2026, silver futures on the Shanghai Futures Exchange consistently traded at a massive premium, between $10 and $26 per ounce, higher than the COMEX price. This isn't a fleeting anomaly. It's a new persistent feature of the market. In any functioning system, this gap is free money. Arbitrageurs would close it within seconds, buy paper contracts in New York, sell them in Shanghai, and pocket millions in risk-free profit. Their refusal to do so is the ultimate vote of no confidence. The logic is inescapable. The fear of not receiving physical delivery from the COMEX in New York is now greater than the guaranteed multi-dollar per ounce profit. This is the smoking gun. It is the market itself declaring that it no longer trusts the West's paper promises. The trust mechanism is already dead. While the West's trust me paper empire decays, the East is building a show me the metal system. Look at the actions, not the words. In January and February of 2026, the Shanghai Futures Exchange suspended 22 trading groups and aggressively tightened its rules, raising margins, limiting positions, all to enforce one principle: prioritizing physical delivery to actual industrial users. This is a definitive power shift. As the saying goes, the tail, meaning the derivatives market, is no longer wagging the dog. The physical market is now in control. But this great uncoupling, This seismic transfer of pricing power from the paper West to the physical East isn't happening in a vacuum. It's being deliberately accelerated by two immense and until now largely unseen forces. One is a non-negotiable reality of global industry. The other is a geopolitical imperative that has been building for decades. To see the final stage of this collapse, you must understand how these two forces are making it absolutely irreversible. The financial fraud we've been discussing is not failing in a vacuum. It's being squeezed between two immense irreversible forces. The COMEX crisis couldn't last forever, but it's these accelerants that are lighting the fuse right now, making the collapse both imminent and irreversible. The first accelerant is not a financial theory. It is a collision with the laws of physics. It's the structural industrial deficit in silver. This has nothing to do with investment demand. For the sixth consecutive year, our world is physically consuming more silver than it mines. According to the Silver Institute, the cumulative physical deficit since 2021 has now surpassed 900 million ounces, with another 67 million ounce shortfall projected for 2026. This is driven by unstoppable, non-negotiable demand from foundational technologies, solar panels, electric vehicles, and now the explosion in AI data centers. Industrial demand is near a record 650 million ounces annually, while global mine production has remained stubbornly flat at around 820 million ounces. The paper fire of the financial markets has finally met a physical accelerant. The fraud is running headfirst into genuine inelastic scarcity. But if you think a simple supply deficit is what's driving this endgame, you're missing the kill shot. This industrial shortage is being weaponized. It's the perfect cover for a much larger, top-down geopolitical move to break the system entirely. This brings us to the second accelerant, the BRICS geopolitical endgame. This is not about markets, it is about power. The BRICS nations are no longer just talking about an alternative financial system. They are actively building it. In late 2025, they launched a pilot for their unit digital currency, a trade system explicitly designed to be backed by a basket of commodities, anchored by 40 grams of physical gold per unit. They are strategically decoupling from the dollar system, and a public failure of a cornerstone Western commodity exchange like the COMEX is the perfect catalyst to prove their point to the world and accelerate a global flight from paper to physical assets. This strategy is not just talk, it is backed by physical accumulation. According to the World Gold Council, central banks, led by these very Eastern nations, acquired a near-record 863 net tons of gold in 2025 alone. They are loading the vaults in preparation. This is the ultimate synthesis. The West's paper deception is being decisively crushed in a pincer movement. It's being squeezed from the bottom up by the non-negotiable physical demands of our industrial and technological reality. And it's being squeezed from the top down by a deliberate, strategic push from the East to re-establish a global financial system based on tangible, physical assets. So the components are now all on the board. The internal rot of the paper system, the physical squeeze from industry, and the strategic attack from a new world order. We've established the how and the why. Now we connect these pieces to see the final sequence of events, the timeline of the collapse itself, and what follows in its wake. So we see the convergence, the 50-year arc of monetary deception, the breaking point we can see in the COMEX inventory data, the irreversible power shift towards a commodity-backed East, and the non-negotiable demands of industrial physics. These are not separate trends. They are tectonic plates grinding towards a single, inevitable earthquake. It all leads to one simple, powerful truth. A system built on trillions in unbacked paper promises is only as strong as the trust that holds it together. When that trust finally evaporates, those promises are not repriced, they become worthless. In that moment, the distinction between a paper claim to an asset and owning the real physical asset becomes the only thing that matters. The paper empire, with its layers of derivatives and digital entries, is revealed to be an illusion. This brings us to the final core principle. This is not a stock tip. It is a fundamental law for protecting your wealth and your family through what is coming. Pay close attention. You either own physical gold, physical silver, or you don't. There is no substitute. There is no in-between. When the reset happens and the fraud is exposed, the value of all assets pegged to that old paper system goes to zero. The entire purpose of this analysis is to give you the clarity to see through that paper illusion and anchor your future to physical reality. The victory of physical reality over the paper empire is no longer a question of if, but of when. The events we have discussed are the clear final signals of this transition. If this kind of evidence-based analysis helps you cut through the noise and protect what you've built, subscribe to the channel and click the bell. You won't want to miss what's coming next.